Hey everyone, welcome back to the channel. My name is Mahesh and I welcome you to my world of personal finance, business and self-development. I personally have been through this journey and I would like to share my insights and lessons that I've learned along the way. So in my last episode, I started a series as to why freelancing is important, how it's a key to financial freedom in 2024. Today, we'll be discussing another aspect of why freelancing is so lucrative. In fact, why it's more lucrative than our traditional employment or traditional jobs. We'll be diving into the details of how it can help diversify your income stream, multiply your earnings, and even to scale into a freelance business. So let's dive straight into it. First and foremost, let's talk about the potential for higher earnings as a freelancer. Now, I want to make one thing very clear here. A freelancer is not the same as a contractor. A contractor is basically someone who takes up a project with a client for a set period of time on a day rate. Now, there are contracts available in UK which are inside or outside IR35. If I am to explain, inside IR35 is basically a contractor who works pretty much like an employee, where he gets a fixed day rate pay as long as he is working, and he's subject to all kinds of taxes just like an employee. Whereas if you are in a contract outside IR35, which means you're operating through a limited company, you're still getting paid a day rate, which means if you work for certain hours, you get paid. So when you set it up as a limited company and you operate truly as a business, then you will start to see the difference actually. But most of us get caught in this impression contracting not to be as an employment, whereas pretty much contracting leads to sort of employment as long as you are not diversifying it. Now let me explain the difference. A contractor is someone who has to come to the job 9 to 5 at a set location for a set level of duties. Now this may not be similar to employment, but at the end of the day, employee at least has benefits of sick leave, annual leave, insurance cover and things like that. Whereas a contractor is pretty much left at his own expense. So when you compare both, the contractor gets a much higher pay compared to an employee, and he is subject to taxes based on whether his contract is inside or outside IR35. Now, this is very different to a freelancer. A freelancer is not bound to work exactly by the hours prescribed by the client. He is essentially given a freelance gig, essentially to do a certain job, or it could be a project, it could be a deliverable, which is what he is bidding for. And once he wins that job and he delivers this, he gets the pay. So most of the time, freelance gigs are quoted for fixed price. Let's say you quote to design a website or do copywriting or serve for, let's say, £5,000. You deliver that, and as long as the client is happy, you invoice and you get paid. You are not looked at how many hours you worked for it. It's pretty much down to the deliverable or the output, and not the time you spend with the client on a certain job. That's how a freelance is very different from contract employment. So that is something I wanted to make clear upfront. When we talk about freelancing, we are not talking about contracting per se. However, contracting also is a good means of starting on as a freelancer. What that means is, as a freelancer, you get much more freedom in terms of when you do the work, how you do it, and what sort of timelines you are going to work. It means you manage the project, you manage the resource, you manage the delivery. You are at liberty to choose how you work, with which team you're going to work. That means you can bring on more clients. It doesn't mean you have to stick to 9 to 5 just like a contractor or an employee to work with a certain client. You could take client A, work for them for a certain deliverable. Let's say you've quoted that for £5,000. Another client you can take simultaneously on at the same time to deliver another scope of work, and which you would bill another X amount of pounds. And you are not restricted to stick with one client for a certain period of time, which means you can juggle multiple projects and thereby multiply your earnings as a freelancer. Again, as a freelancer, you are pretty much in control of your workspace, which means you could work from home or you could work from anywhere on the globe for any of the clients in any part of the continent. Well, that doesn't mean most freelancers show that you're going to sip a cocktail, sit in a resort, work through it. You could, of course, do that, but myself included, we all have families, we all have our roots in certain places, we're going to stick to that place. So most of us would be working from home, or if you set up an office space, then that's where you would work from. What that means is you don't have to travel to the client like you do in a 9-to-5 employment, which means you save so much time which you would have spent on travel otherwise, and so much money. Even in now the travel expenses are through the roof. You're saving all that money as a freelancer. So when you take on multiple clients, multiple projects, and also manage your expenses at your control, you pretty much don't have a cap on your earnings as a freelancer. Unlike a fixed salary or a fixed contract rate, which is capped at the hours you work. So now that we have established how you can actually multiply your earnings, the second point is how to diversify your freelance portfolio. Now imagine you've got multiple clients. Now you are providing certain services, which means you are really an expert in this niche. How about creating more digital products out of your skill set? You could create training programs, you could create templates, you could create newsletters, which are pretty much giving this knowledge base of yours to a wider audience. And you could charge for this. There are a lot many platforms out there which would actually pay you to digitalize your training programs. Platforms like Skillshare, Udemy, where these small nugget programs which you create as training packages can be sold to a wider audience, which means you don't have to repeat yourself or you don't have to take repeat classes. You could also diversify yourself as a trainer in that niche and offer these training programs at a good price to people who are looking to upskill in this space. And these are passive income streams, because once you create them and they're available and they are a good knowledge base, you will have a lot more people subscribing to those programs, newsletters, or modules, and you don't have to do anything more beyond the initial hard work of setting these programs up or setting this content up. Next major advantage for a freelancer is you can scale your freelance as a business. Now, when you're a solo performer, all you can do is whatever time you've got available at your hands, which means you can only work on a certain skill set or a niche that you're working with. What if you join hands with others in your network? This is why I mentioned networking is very key in freelancing if you look at my previous videos. So, for example, you are a web developer who are very good at building websites. You could partner up with someone who is really good in SEO or someone who's really good as a graphic designer. You can join up and offer these services as a package to a client who's looking to build a new website or even revamp his current website for a better reach and create an online presence for his business. So when you go forward with such package proposals like this, clients are more willing to engage with you because they don't need to source multiple freelancers. They get one-stop shop for all the services required as far as their website launch is concerned. Not only allows you to broaden your service offerings, but also removes the dependency on you as a single resource. What that means is you can bid for larger projects, which obviously are going to pay larger amounts of money. And at the same time, you could divide your time across multiple projects. Now, the fourth and most important point is how does tax impact you as a freelancer? Now, when we talk about employment, it's all tax deducted at source. And in UK, the tax is pretty much gone to the highest level I've ever seen. It's more than 40% tax on a high-end earner. So if you're an employee who is earning above 100K in salary, you will be paying a lot of taxes, which means almost 50% of your wages are going to go to the government. And now as a freelancer, if you set up a business, which means you're operating through a limited company in UK, you get a lot of tax breaks because governments love businesses to flourish because they're going to create more jobs in the economy. Thereby, always governments will look through a more favorable lens as far as taxation is concerned when it comes to limited companies. So if you're a freelancer who's looking to go big and expand your portfolio, think about going through a limited company. In fact, I would say anyone who is going to start freelancing should start with a limited company, because then you set the base for you to grow at the very beginning than having to restructure later. In fact, you start to get the tax breaks from day one if you set up as a limited company. To put my point in more detail forward, let's go through a comparison here. We will consider an employee who is getting an annual salary of £100,000 versus a freelancer who is operating through a limited company and has invoiced the same £100,000 in that year. Let's compare and see how much they actually take home. Let's first take a look at the employee earning £100,000 a year. The personal allowance in UK stands at £12,570, which is the tax-free amount, and the basic rate of tax starts at 20%, which means up to the amount of 50,270 you would be taxed 20%. So taking away your personal allowance, that leaves £37,700, which is taxed at 20%, which leads to a tax of 7,540. Given £100,000, you are going to be in the higher rate tax, which is 40%. That means any money earned above 50,270, which is the 20% slab, you're going to get charged a rate of 40% on the remaining. That is £49,730. The tax at 40% on this amount takes us to a total of 19,892. That is a lot of money to give away. Total income tax put together, 27,432. Now that's not it. You have national insurance. So primary threshold to upper earnings limit, that is the initial 12,570. If you take away from the 20% tax bracket, you land on 37,700. The NI charged on that is 12%, which is 4,524. And beyond that, up to 100,000, which is the 49,730, the NI charged on that is 2%, which is £994. So the total national insurance you end up paying is 5,518. So total deductions, in total income tax is 27,432, national insurance is 5,518. So total tax is 32,950. So the take home here is the 100,000 that he was supposed to earn getting deducted to a take home pay of £67,049. Now that's really, really sad. Someone's actually worked their butt off to get 100K, and you can see a large portion of that amount goes into the government's hands. But I know some of you might argue you've got to pay your fair share of taxes for the development of the country. Absolutely, I am all for it. 40% tax is just way too much. It's not like every employee's tax is the only thing that is going into the government's treasury. If you think about how money works, a business is going to get money from a customer, which means I, as a customer, I've got my salary, I've already paid my taxes for that amount, right? So what I have in my bank account is actually tax paid amount. I am taking £100 from that and paying it to a business to, let's say, or to a restaurant, let's say. I've got £100 bill. I am paying out of my wallet for which tax is already paid. That £100 goes to the business. Business has already charged VAT on that bill which they gave me. I am paying that in that £100. They have to pay whatever VAT they collected on that £100 back to the government or to their suppliers. Every time that £100 moves from one hand to another, there is tax paid back to the government. So even though it's the same £100 that is rotating from person A to person B to business A to business B, every time a transaction happens, there is money paid as tax back into the government's treasury. So it's not a one-to-one relationship. What I'm trying to tell you is the tax paid to the government is many-fold multiplied on the transaction or the value of money that is circulating in the market. So there's a lot of money that is going as taxes back to the government. So if we keep our fair share as part of the hard work we've done, government has actually given us tax breaks if you are a business. So what's wrong in using those benefits, right? Now let's take a look at someone who is earning £100,000 as a freelancer through their limited company. So they have invoiced their clients for £100,000 for the wonderful work they've done. And what happens with that £100,000? Obviously, with £100,000 as a company's income, there is corporation tax to be paid. Now, corporation tax is paid on the amount that is after every expense incurred by the business. There are a huge amount of allowable expenses given by the government, which can be utilized by the business. Current corporation tax on a business earning 100K is 25%. Compare that with the tax that you are paying as an employee. Now, from the £100,000, once the expenses are deducted, whatever is remaining is the net amount on which you have to pay taxes as a business. Now, here is the catch. That amount is in your bank account, which means the second your client is paying you whatever you have invoiced, that 100K you will physically see in your bank statement. It's unlike the salary that comes to your account where all the taxes are deducted and what you see is only the remaining 60% of your total pay that was supposed to come to you in case of an employment. Here, the £100,000 literally comes into the business bank account of the freelancer who's operating through a limited company. You won't understand the kind of confidence that would give you as a person when you see that kind of money in your account. Once it is there, it is totally in your control on how to manage that money in terms of taxes, in terms of expenses. For a company, there's a financial year end. Let's say it is March when the financial year is ending. So after the financial year end in March, you literally have time to file and pay the taxes until the November, which means all the money that has come to you from April 2023 to March 2024 is sitting in your bank account until November 2024. That gives you a lot of time and opportunity on what you do with that amount of money. You could invest that, you could use that to build your business. As long as you are paying the taxes at the right time, this money is in your bank account, is within your imagination on how you want to use it. Now, that doesn't mean you go out and spend and take a holiday. No, you always need to factor in your taxes, save out all that money, and the remaining money is yours to do whatever it is. Now, one of the important things here is from a limited company, there are different ways of drawing money. You could draw it as dividends, you could draw it through various other means. Now, most of the people might argue, oh, it's the same, I have to draw all the dividends out. Then I end up paying the same amount of taxes like an employee. Well, not. What is forcing you to draw out all the money? You could draw out money in different ways. We will look at it in the next episode. Now, if you manage your money efficiently in terms of how you take earnings out from your limited company, whether it's through dividends, whether it is through a director's loan, or if it is for, your pensions or investments, there are a plethora of methods available for businesses to draw money out. That is where a smart accountant will come very handy in helping you. We will delve into the details of some of these tips and tactics, which is what I'll cover in my next episode on how you could manage your money, taxes, and how you could draw out your profits from your limited company as a freelancer. Hope you liked this particular episode about how freelancing can be more lucrative than a traditional job, and how you could diversify your income, multiply your earnings, and even grow your freelance and scale it as a business. I really hope this video was informative and useful, and the reason I'm doing is to inspire and help more people come onto the way of freelancing, because I truly believe that's the path to financial freedom and wealth creation. So if you like this video and you would like to see more of similar content, please do like, subscribe to this channel, and do ask your questions and comments. And I would love to see you soon again with my next episode. Thanks again for watching. Keep growing, keep smiling. Until next time. Thank you.